You can change your trading overnight by using structure-based trading and multi-time frame analysis. Have you ever looked at your chart and said to yourself, I understand market structure. However, when I go to the actual chart, drill down on another time frame, I don't know where to place the trade. We get this question and concern from a lot of traders. So in this video, I'm going to clear that up for you. I'm going to show you how to use the power of market structure trading and multi-time frame analysis to take that trade confidently. I'm Kenya Horton with BK Forex Academy. We help new and struggling Forex traders learn how to trade with structure and guidance so that you start the right way, have a breakthrough, and trade confidently. Do me a favor, give this video a thumbs up, go ahead and subscribe, turn on that notification bell, and let's get right into it. So if you are a market structure trader or you've been interested in learning how to trade market structure, you are going to love this video. You can see right now that I am on the daily time frame of NZD CAD. Now, we need to understand what is market structure. So before we do anything, let's talk about what is market structure. When you see structure on your chart, it is nothing more than support and resistance. It's that simple. So regardless of what you hear, don't let it confuse you. It's just support and resistance on your chart. So for example, you can see previously that this market was in a downtrend. And if I wanted to define the market structure, anytime you have structure on your chart, if you have a previous uptrend, it's always going to come to a halt. And then you will have, for example, a high, you will have a low, you will then have a lower high, you will have a lower low, you will have a lower high, a lower low, a lower high, or this actually didn't quite break above the previous high, but it continued to push lower. So here's your lower low, your lower high, and your lower low. Okay, so this is the bearish structure on my daily chart of NZD CAD. Now, one thing I'm always asking myself, especially when there's an imbalance between buyers and sellers, for example, you can see the price came here and look left, there's no price action here. I'm always wondering, why did the price stop here? So all I do is I like to look left and just see, okay, was price recently in this zone? Now it makes sense. So price was actually here back in May of 2020, and you can see where this reversal started. So one of the things when you're looking at structure is you always want to look at your higher time frames. For example, if you are a scalper or an intraday trader, you should be looking at structure on the daily time frame, and you should be finding your standalone levels. And when I say standalone levels, what I'm talking about is you want to find areas on your chart where the market made a forceful reaction. So for example, you can see, like I said, when the market came here, look how much the market moved from this area. So it went up for quite some time, and look when it finally came back here. So it came back, it was here in May of 2020, and it came back here in January of 2022. This is a huge level of structure that you definitely want to keep your eye on. So look, when the market came back here, look exactly what it did. Okay, so now that we know that, we're going to drop back down to our daily, and we're just reading structure. We're just getting a feel for how to trade market structure, okay, in order to help us find those confident entries and exits. Now you can see that the price shifted from this level like it did 2 years ago, and now it formed an uptrend. So how do we know that? It broke the previous level of structure. So right here with my crosshair, you can see that this previous high right here was broken, and the price broke above it, and it formed a new high. So it formed a new high here. It then came back and formed support at an area that was previous support on our chart. So it retested the broken trend line, okay? Then it continued to push up, and it made a higher high, and now it's coming back to form support at a higher low. So in this case, what we want to do is, after the structure has been broken, we need to switch our bias. We now need to switch our bias, one from a bearish bias to a bullish bias, because now the market has shifted and it's going the opposite direction, okay? So now that we know this, once we have our trending structure and we change our bias, so we're no longer thinking bearish, we're going to change our bias because the price has now shifted to an uptrend. The next thing that we are going to do is we're going to find our standalone levels to trade from, okay? You only want to mark levels on your chart where you plan to make a trading decision. You don't want to have like 10 different lines or zones on your chart. It's only going to cloud your thinking, and you're not going to enter confidently. A standalone level, let me drop down, for example, to the 1 hour, okay? And I will give you an example. A standalone level is basically an area on your chart where the market made a forceful move. So can you find support and resistance with your naked eye on this chart where the market made a forceful move from? Okay, so I would say definitely right here. You can see when the market came here, and then also right here, resistance. Okay, so this would be a standalone level on the lower time frame. Now, what you want to do is after you identify your structure on the daily, you want to find your standalone levels. So after you identify your structure on the daily, you want to find your standalone levels, and then you want to make trading decisions on those levels from the lower time frame. So we can see here with our naked eye that this is definitely a standalone level. Okay. And I would also say actually right here, because look how much the market moved from this area. But right now, this is where the market is finding resistance. So you can also see right within this area as well. This was resistance, and look how much the market moved down. So this would definitely be a standalone area. The next area I would identify with my naked eye is right within this area here, I would say is a standalone level. And if we move that out here, this also aligns with what we're seeing. So why is this a standalone level? Well, you can see here, look when the market was support and look how much it pushed up. Look, and it came back here. It formed as support and it pushed up. It came back, broke through the structure, respected it, came back, broke through it, came back, formed a resistance here, came down, broke through it, and now it's coming back here again. So this is a level that the market is respecting, and it also made a decent move from these areas. So given this, I'm going to wait for the market to come back here. And one of the things you're going to always notice on the higher or on any time frame with structure is that the market is constantly moving in these waves. So for example, you can see here that the market moved up and then it formed a retracement. So you're going to have a wave, a retracement, a wave, a retracement, or we also say impulse correction, impulse correction. Okay. So now that we know that, the market is moving back into this structure and we want to look for an entry reason. So there's different ways that you can look for an entry reason, but we have confirmations. In order for you to enter the market confidently, you have to have a few rules that you follow. So for example, I can put together a simple strategy just with market structure. Number one, I must have a trending structure. So that's already confirmed. We have a bullish structure. Number two, if I'm an impulse correction trader, I need to have a correction back into a previous level of structure. So I can take my Fibonacci, for example, and because this is an uptrend, I would take my Fibonacci and I would measure from the lowest swing to the high. And anytime you have an impulse wave, you want to see a correction. Okay, so we are getting a correction right now back into almost the 618 fib level, and it's rejecting within this area, which also aligns with our key standalone level. So considering this, what we would do if we were a scalper, for example, or even an intraday trader, is we want to wait for the price to move into this area, and then we want to drop down to the lower time frame. So if we are an intraday trader, we're just going to move down to the 4-hour, for example. Now, why the 4-hour? Because on the 4-hour, we are taking trades within the course of the business day. So we might be in that trade for about maybe 2 hours, anywhere from 2 to 8 hours. Okay, so if we're in that trade from 2 to 8 hours, then we're in that trade for the course of the day. We're not looking to hold it for overnight because we're not swing trading. So now what can we do? Now you can see the market has come back into this area. It's forming support. We still have an uptrend. We have an impulse wave. We also have a correction. I can also say, okay, I have a flag. So I have a flag forming. So I must have a flag. And depending on how you trade, flags would be a reason for why you would enter the market based on how you trade flags. So I'm just showing you how you use structure to put together a strategy, to put together an entry reason. There are multiple ways that you can get into the market based on your preference, but really simple. If you're able to restructure, you can trade confidently without any particular type of indicator, or you can just use price action and structure. So now you can see the price has moved back into this support. So now we're going to look for an entry reason. So what are some ways you can get into the trade? You can use patterns, for example, double tops or double bottoms that you want to see on the lower time frame. You can use head and shoulders. Maybe you want to see a 1, 2, 3 move. So for example, in order for you to get into this trade, you want to see a 1, 2, and then 3 move where the market moves up, come back and retest the zone, and then pushes off of it to form a double bottom. So you would have a double bottom here, and then you would take that trade. That could be an entry reason. You could even use a single candle confirmation. So every trader is different. You only need about, I would say, 3 good rules to why you want to enter the trade. You can also use a moving average. So if I plop this moving average on here, you can see that right now on the 4-hour, this is showing as a downtrend, right? So of course, if I want to be buying, then I wouldn't have an entry reason according to the 50 MA. However, if I move to the daily, you can see that I clearly, if I'm a swing trader, then this would probably be an entry reason for me. I have a trending structure, prices above the 50 MA. It has pulled back into a standalone level, which is a level that I am interested in trading from. So that's 3 confirmations right there. And maybe my 4th confirmation would be anything of interest that I want to see. Okay. So those are entry reasons. The structured trading secrets you must know and follow is number 1, you always want to identify the higher time frames in order to find an entry reason or your standalone levels. Okay, the higher time frames are going to show you the strongest levels to trade from. So for example, if you would have traded from here, this would have been a standalone level because you can see, like we identified on the weekly back here a few years ago, look how much the market moved from this area. So that is your standalone level. Okay. But right now we need to focus on where the price is right now. Where is price action and where is the nearest standalone level? So what I know is that if I'm using the 50 MA and I know that I'm trading market structure, ideally, in order for this structure or trend to be intact, the market should not break the previous low. So the previous low would be right within here. Okay, that would be our previous low, which also aligns with our 50 MA. So the market could still come back down anywhere within this area. And this is why I don't like to use lines on my chart. I like to use these rectangles. Okay, so you want to draw your rectangle wide enough so that when the market gets to that area, you want to react off of that area. So you want to wait for the price to get there. All right. So again, just a quick recap. In order to trade market structure, first you need to understand exactly what it is. It is nothing more than support and resistance on your chart. The very first thing that you're going to do is you're going to identify your trending structure on the daily. If you are, I would say, an intraday or even a scalper. If you are a swing trader, you're going to want to identify this probably on the weekly, daily. So you want to be paying attention to the weekly and the daily. And then you want to drop down to the lower time frame. So on the daily, for example, if we are looking at the daily, we're going to ask ourselves, what is the trend? We identify the trend. We then find our standalone structures to trade from. We wait for price to move into those areas, and then we find additional entry reason. Remember, when you drop down to the 1 hour, you're almost always are going to see a counter trend structure, and that's okay. You're basically wanting to see the price move into your target area, and then you want to apply your rules for entry. That's it. Those are the powerful secrets that you need to know to trading structure, and it will help you improve your entries and also your exits. If you were to, for example, get into this trade just based on structure, for example, and you have your 3 or 4 entry reasons, where would be your take profit? Well, if we know that we have an impulse, correction, and then on our third wave, we have an impulse, right? So if we have another impulse, we expect for it to at least break above the previous high so that the trending structure would continue. Where would be the next area that it would possibly reverse from? It's going to be this area right here. This is our next standalone level, okay? So what I identified earlier, this is our next standalone level here. So this is where we expect the market to potentially reverse from. We could take profit about right here. We could also take profit right here. Okay, resistance. So from zone to zone. And you basically could trail your stop loss if you wanted to, or continue to move your stop into break even. All right, comment below and let me know if this made sense to you. Do you have any questions in regards to this video? Do you currently trade structure analysis? Let me know. Otherwise, I hope that you found this helpful, and I will see you in the next training video. Go and test these market structure trading secrets, and I hope that it improves your trading. Thanks for watching.